Trying to find the right mortgage product for you? Here's how a $300,000 purchase plays out across a conventional FHA, VA, and USDA option. Option 1, 3% down. This is for first-time homebuyers only. Now, before we dive into interest rates, remember these are not your rates. You have to contact me to get your own. I shop these on a 760 FICO score with the down payments that you see here. We're going to look at the high points first, then break down the monthly payment and cash to close. So right now we've got a 6.75% rate. That total payment with taxes and insurance is around $23.82 a month. Cash to close $16,433. P&I is your principal and interest payment. That's based off the loan amount and the interest rate. Your property taxes and insurance are dependent upon the home that you choose, and this is based on my market, which is Northwest Arkansas. Conventional loan mortgage insurance rates are shopped the same way interest rates are. So your FICO score, your loan to value, or your down payment, and some other factors are going to play into the rate that you get. All of that brings the total monthly payment to $23.82 a month. Let's break down the closing costs. You've got your down payment of $9,000. That's your minimum required investment. These two costs together are your lender and title fees. Prepaids are your prepaid daily interest and your prepaid homeowner's insurance with some reserves. And all of those things combined bring you to $16,433 cash to close. Now let's compare with FHA. For FHA, we have a 5.99% today. That total monthly payment is $22.98 and your total cash to close $17,889. On the payment breakdown, you're going to see property taxes and insurance the same for every single program because we're assuming the same property. The principal and interest is lower on FHA because the interest rate is lower than conventional. But for FHA, the mortgage insurance is a set amount, so it's a little bit higher in this scenario. I see a lot of times that clients who are in like a upper 600s to mid 700s actually benefit from FHA, but if you're in a really great credit position, your mortgage insurance on conventional might actually be better. And this is why it's important to compare because it's actually cheaper monthly for this client to go with the FHA option, even though the mortgage insurance is higher. An important note on closing costs for FHA, the down payment's higher at 3.5% versus 3%. You're going to notice the loan to value is higher, and we're going to talk about that in just a second. Again, you have your lender and title fee, but something that FHA has is what's called upfront mortgage insurance premiums. It's always 1.75% of the loan, and it's rolled back in, which is why this loan to value is higher. You've still got your prepaids, and the total cash to close is higher, mostly because of the down payment here. What about VA loans? We're going to assume that they're funding fee exempt. That means if you have a disability rating of 10% or higher, you don't pay the funding fee. If you do have a disability rating, then your loan amount is going to go up. Quick overview, 6.125 interest rate, $22.25 a month in payment, cash to close $7,445. This payment's still $156 less than our conventional, and we're going to talk about why. Number one, interest rate's better, so your principal and interest payment is less. Taxes and insurance are the same, but there's no mortgage insurance for our veterans. That means their total monthly payment is cheaper than FHA and conventional. And just real quick, notice that the USDA one is actually higher than VA as well. Let's break down cash to close. We have no down payment, so our loan to value is 100%. We have our lender and title fees. We also have prepaid, but overall cash to close is significantly less at $7,400. If the veteran did have a funding fee, it would go here and it would increase that loan to value and the loan amount. And lastly, let's talk about USDA. It's a zero down rural loan program. You'll hear it called Rural Development or RD, and I'm going to go ahead and tell you that this is one of the hardest to qualify for, mostly because it has a debt to income restriction that's much lower than all of the other programs. It also has an income restriction and a geographic restriction. But let's take a look. A 5.875% rate today, a payment of $22.81 per month, and cash to close of $7,800. For the payment breakdown, we have our principal and interest. Again, the interest rate's lower, so principal and interest is lower, same taxes and insurance, and your MI, it's set at a 0.35% for all USDA loans. On USDA zero down, you're always going to see 101% loan to value. That's because the 1% guarantee fee is always rolled back into the loan amount. You've still got your lender and title fees, and on this one, I included some points for that 5.875 rate. This $3,000 is the 1% guarantee fee that's rolled back in. You've still got your prepaids, and all of that brings the cash to close to $7,800. For someone that's well qualified and can do multiple loan programs, this would show you that the monthly payment is pretty close to the same across the board. But there's a lot of instances where I have a client that qualifies for both conventional and FHA. I had one today that going FHA saved them $300 a month. Ultimately, the loan program that you go with is really going to depend upon your credit score, how much money you have to put down, your debt to income ratio, and if you qualify for multiple programs, it might just be whichever one is most advantageous for you. If you need somebody to help you determine which loan program suits your needs best, hey, I'm Amber. I'm a certified mortgage advisor, and I would love to help you. You can find my contact information on most of my social platforms, or my link in bio has a way to get in touch with me. Hope you guys have a great day, and I'll talk to you soon.